Good morning everybody, and welcome to the Propenomy Bite TGIF. Thanks God it's Friday, yay! Saturday and Sunday, resting a bit, first weekend of 2019. I'm Daniele Gambero, Dr. Daniele Gambero, the Propenomist, and I'm here with you to comment some of the news in the papers. Here, my main source of information. I am a partner in crime with the Edge Financial Daily. Extremely on the dot news, reporting news in a very professional way, very fresh news, highly recommended to everybody. Okay, it's available both printed and online version. Today the first page was again talking about the past. MOF bagged RM 780 million out of the quasi-land transaction. I prefer to look at other things. You see how I'm dressed up? Construction with a helmet to protect my head if bricks are flying around, because we are talking about property outlook for 2019. The first news is here. Some rating agencies, bank comments, and so on, are saying property outlook, no sign of recovery yet. And this article starts up saying the domestic property market is projected to remain soft in 2019, as the issues of oversupply in certain segments and tighter lending are expected to continue to plague the market. My comment, oversupply is definitely there. High-end sector, scarcity of land has been bringing up to the sky the cost of land in the proximity of central urban area in KL, in Penang, in JB. Prices have been reaching unaffordable, highly unaffordable, impossible to touch, I would say, level. So buyers have been pulling back. I fully agree on this, but still there is a healthy demand for housed product priced between 200, 150, 200,000 minimum up to 900, 800, 900,000. This product is still in good demand in the market. However, there are few points that we will see on how the general environment is affecting a decision-making process. Let me complete the commenting of the first paragraph of this article in saying that I disagree with the tighter lendings. That I know banks never change their guidelines, didn't reduce the margin of financing, didn't make financing more difficult. Point one, buyers have to go through, you all buyers have to go through a proper audit, self-audit of your financial background before you approach a bank for financing. Banks are looking at a lot of things. I will talk about it in a different posting in Propenomy Academy, but banks didn't change the guidelines, didn't change the rates, didn't change the margin of financing. Everything is still there. Banks are still financing 90% if you are entitled to receive 90%. All right? And of course, the other thing that has been affecting the lending margin in some of the projects is that banks are lending money for you to buy a house. What is their collateral? Your house. So banks are doing what? They are engaging a professional valuer to tell them what is the value of the property. And if the valuer cannot capture the value that has been proposed to you, it means that definitely that property will be having a lower margin of financing. Is as simple as it is. You look into my personal page, Dr. Daniele Gambero, search in Facebook, is a live page. I've been posting yesterday and the day before to video clip related to this. you might be finding some interesting point out of it. So this is the first paragraph. Then we go ahead and say that earnings were largely disappointing on the shares of the big developers, and because all of them have had sales below expectation, and consequently, you don't sell, you cannot build, your cash flow is badly affected as a developer. Then they name 3 of the main developers having issues, headaches. One is SPCitia, one is UEM Sunrise, and another one is Massing. Very good developers, 3 of them, high quality, but with the majority of their product in the higher segment of the market, high end, which we saw is oversupplied. So is consequence of a choice that these 3 developers have been doing in the past. I want to go for a high segment, for a high target market. You have to pay the consequence of it, honestly. Buyers are still around, but unfortunately, before the end of the year, they were waiting, September, October, they will start a wait and see type of attitude, looking forward to see the budget 2019. Then budget came in and the government requested the developer, please drop values 10%. If you are a buyer, what you do? I wait and see law. Very simple, right? I wait and see. So buyers in the market are waiting and seeing what is going to happen. Developers will drop, don't drop. I am personally foreseeing first 1-2 quarters of 2019 very soft because of all these uncertainties, so to say. Again, other agencies, other rating agencies in this article are mentioning that the forecast for all of them is weak, is soft because lending and oversupply. I commented already. A good thing is they are mentioning one of the agencies, don't remember which one, wait a moment, MIDF. MIDF has been coming in and saying our top picks for the sector is UOA Development Bahad, as we like its strategy of launching urban-based affordable prices properties in the Klang Valley. I love it because it's exactly confirming what I'm saying. Affordable values are still in demand. So these guys are receiving a positive feedback on this. Same goes for one of my favorite, if not my favorite developer, Sunway Bahad. Sunway is, together with Land, the most sustainable, 2 of the most sustainable developers in Malaysia. You look at all their township, is a perfect mix of industries, businesses, office, shop lot, residential, leisure, F&B, everything is there. Catalysts are in all Land and Sunway township. So I like very much these 2 developers. Very short, second news, ECRL. Fate rests within MRL and CCCC report. East Coast Rail Link. Cancelled, reactivated, cancelled again, stopped, paused, rewind, don't know what is happening. But there are good chances that this project will really come back alive in the next 3 to 4 months. And with this coming in, there might be a fast pickup of Kuantan and East Coast property market, Kuantan above all. Last, but we will discuss more about it next week, is Hong Kong housing crisis, which is not dropping values. Actually, values in Hong Kong keep on going up. Why? Because the demand is still much higher compared to the supply, at the extent that to tackle the housing crisis, Hong Kong government is considering to start building 4 artificial islands equal to about a 1/5 of the size of Manhattan. Well away. Well away, I would say. They are based this on two existing projects. One is Forest City in Johor, and another one is Sutra Island in Singapore. Both of them reclaimed land and artificial islands. We will talk more about the value of reclaiming land, it is worth or not worth, next week. For now, this is all. I've been already spending and overshooting my 10 minutes. Hope you enjoyed the Propenomy Bites, and I'll see you back on Monday morning at 11 o'clock. Happy weekend to all. Ciao.